The tokenization of real estate has happened, and it is only getting larger from here. Why I'm making this video, I saw TikTok, and the hook grabbed me. So you know that's good whenever they grab our attention. Here's what the hook said. I own a piece of a New York skyscraper, and it cost me less than my PlayStation. So I was interested. I'm in real estate. I wanted to know how he did it. Basically, he has fractional ownership, and we're going to go into what that means, how groups are putting this together, and what investors are doing, and also some of the risks that go around with this type of investment. It's really important for you guys to know how we can get in trouble. I'm going to save that to the end so that all investors can avoid it, and we can continue making sound investments on the way. Now, one thing that I hear a lot from my friends, typically friends of mine who are older, is that no one has ever been able to explain the blockchain, crypto, NFTs. The big pushback I get is that it is so complex that it feels like people are just talking shit and, they're hooked on a fad ultimately. So I'm going to attempt to explain what blockchain is and how NFTs are actually being used today in everyday life. We just don't realize it yet. So blockchain, here's how I want you to think of blockchain. It's basically a shared Google document is basically how you can view it. It's a ledger that everyone can see. Anything you own, anything you've purchased can all be put on, let's say, this shared document. There's no middleman. There's no one that can come in and change it. It's the biggest trust build you can have as far as a public document goes. Now, an NFT, the thing about an NFT that really jammed us up, I think, is all the JPEGs. When all the monkey JPEGs were trading for like $400,000 and people are like, I don't understand, why is a JPEG worth so much? You were correct in your calculation. That JPEG should never have been worth more than probably $1. But it was because of hype, not because of what NFTs are. NFT is ultimately the receipt, right? It's what tells you what you own. The best analogy I can give for an NFT, if we're talking real estate, is title. So think about what happens when you purchase real estate. You have to basically be put on title that you own the property. That is a public document. There's a record of it, but, well, a lot of people can see it. That's what an NFT is. It's just a digital version of it, right? So do I have a piece of paper here? Yeah, okay. Here goes this note. I hope I don't need it. So if I'm holding up my title, here's my information, or I have title as a digital file, there's no difference right now. We are experiencing it in real time. But an NFT is like the actual contract and is a much more legit form of what you own. So I think what we're going to see by nature is NFTs are going to be involved anytime we own anything. And there's way less risk of people, they call it, it's non-fungible, but you run way less risk of somebody frauding you out of what you own, right? Fractional ownership. This one, for all the real estate people that follow me, you're going to understand this one. So why all the kids are liking fractional ownership? Because you can now buy real estate without having to come up with, let's say, a $300,000 down payment. And this is something that actually happened. So instead of needing a giant down payment, you can now divide the down payment into shares, and these shares are called tokens. And you can now buy for as little as $50, and all of a sudden you are a co-owner in that property. And there's platforms doing this right now. There's a platform called Realty, where you can buy a token and every week you can get paid out crypto through the rental income of the property. There's no management of it. It's a passive investor. It's a passive investment. Deloitte, who's one of the monsters, I mean that in the sense of they're one of the giants, they say there's $4 trillion in real estate that's going to be tokenized by 2035. So it's happening now, but what we're about to see is massive scale. Now, this happened to me about 3 years ago. I was in Austin for FinCon. It's a big financial conference. And I stayed at a house with 20 financial influencers, all TikTok influencers. And they had the guys who did Wall Street Bets come out. They were doing a documentary, and they were speaking to the group. So I was in the group. And for context, I was like the boomer. I was at that point 38, and the next oldest person was 22. So it was all young kids. And one thing that I heard him say over and over is you now have access to buy shares, right? Like you can now come in, you don't have to make the full down payment. You can come in and put a smaller investment and participate. And I was listening to it and I was like, I raised my hand and I got laughed out of the room when I said this. I was like, hey, so before we get back into the podcast, I have a quick update. We just got 3 new apartment buildings that we're putting into our 6th fund, and it's in such an undersupplied market. So if you've always wanted to get into real estate because you want passive income, tax benefits, and appreciation, but you didn't want to do the work, I might have an offering for you. Check out communecapital.com/fund6. I'll also include the link in the description. Let's get back to the interview. Why is this different than what you can do right now? You can already have or purchase shares of a syndication. You can purchase a public REIT. Why is this any different? The whole room laughed when I said public REIT. They looked at me like I was nuts for even bringing that tool up because they thought that was like an outdated investment that only boomers do. I think I'm actually right in the comparison, but it is different. So anyone who doesn't understand syndications, I'm going to give you a quick breakdown, and then I'm going to show you why it's similar and ultimately why I think it's going to be better. So right now, if somebody's going to invest with me, I'm going to create an LLC, and that LLC is going to own the property, and then my investors are going to buy shares out of that LLC. So on title, the LLC is going to own the building, and then your shares are going to be reflected, or your shares are going to be owned, and that price is going to be reflected on the value of the asset, right? That's already at play right now. What this allows you to do, if you tokenize that same strategy, you still don't own the property. You can, but if you start getting into the larger stuff, you won't own the property. You'll own tokens that represent shares. But the cool part about it is, in a lot of cases, you can sell those shares on a secondary market. So you can make the argument that you can get liquidity, you can get the same benefits of owning real estate, but the cool part is when an investor comes to invest with me, all of the, let's call it rules around that investment are in your documents, your subscription agreement, and the PPM is going to basically spell out everything we can and can't do. The NFT basically becomes a smart contract that holds all of those rules in place on your token. It's such a simplified way of doing it. So I think it's going to be, I think this is the way. Now, here's some of the kind of good things about it. Number one is the transparency. Everyone can see the record. There's no shady title issues at all. The automation of it is pretty rad. So the smart contract that I talked about, that can pay your rent. It can enforce the rules. It handles all the paperwork, and there's no people needed. This is probably one of the scary parts about technology is we are concerned about jobs. Like, what is everybody going to do? I actually think everybody's going to have jobs. I just think it's going to change, but that is a big part. Fractionalization, I know they're making a big point to this, that you don't have to own the whole thing. You can just buy a slice, but technically you can still do that now. New Jersey, here's one that shocked me. New Jersey is already putting 370,000 property records on blockchain. So you're already seeing cities do this. That is a tell for me that, holy crap, this is already here and it's happening fast, because typically you see the government entities doing the current things last. BlackRock is now tokenizing 10 trillion in assets. This isn't like a Web.3 trend. This is infrastructure. So pretty wild. Here's a case in Texas. A house in Texas just sold to 38 people using an NFT. So what did they do? They had a company called Homebase. They took a house that's worth $235,000 in McAllen, Texas, and turned it into tokens. Then they raised $246,000 from 38 investors. And these are normal people. So there's nothing crazy or out of the ordinary about this. 15 of them have never used crypto before. So they set up their first wallet to buy in, and that now they earn weekly rent in USDC, and they can sell their shares on the platform that they want. So really, really cool. A couple other companies that you have out there to do this with, Propbase and Block Square. They're doing the same thing in Berlin and in New York. You don't need to be a millionaire anymore. That's the cool part. You just need a wallet and a phone, which we all have. The platforms pay you rent every single week, and it starts with a $50 buy-in. So here's why I think Gen Z and even younger millennials are so into the new way of investing. Number one, the tech component has made it fun. So you have Robinhood, you have your crypto wallets, you can invest very seamlessly. Most people want cash flow, even when they're young, which I think that's a mistake. But all of that comes into play. And here's a part that you have to be careful of, but it's also kind of exciting. You can use your tokens as collateral on financing platforms. So I had a call yesterday with a friend of mine, and I asked him how his investments were, and he said Bitcoin's been just a rocket for him. He bought in around 2020, bought a lot of Bitcoin at $17,000 a coin. Now it's valued at about $120,000. And I was like, what are you doing? And he goes, actually, I'm borrowing against it. And I'm using now more money to buy additional assets. So he's looking at it as growing his wealth at a faster pace. Here's where you have to be careful. Leverage is absolutely your fastest way to wealth. It's also your fastest way to bankruptcy. So the risk you run is crypto moves in value quick, right? Today, Bitcoin's at 120. Tomorrow, it could be at 40,000. I don't think that's a high probability, but that can happen. If you're borrowing against your crypto at 120 and the floor drops out, you're getting called on your loan. And a lot of people don't have the money to do that. That's when they get wiped out. So you have to be very careful with leverage, but I'm not going to say that doesn't open up the window for a lot of people. If you've made a lot of money with crypto, you now have a debt instrument that we use today in our real estate to go buy more real estate. So I think that's pretty exciting. Why millennials and Gen Z are all over this. This is a pain point that you're starting to hear a lot today, is that Gen Z is viewing the American dream as no longer being in reach for them. But Gen Z is creative. I don't think that means Gen Z is giving up on their wealth build, even though Gen Z gets a lot of criticism for complaining, right? This is a conversation you're seeing a lot right now, that Gen Z is talking about how it's not fair, the system is rigged, they can't buy a house, it's harder for them, and you're seeing millennial clap back, and definitely X and beyond, that it's actually better for you than it ever was for us, right? Something I heard today. Gen Z didn't have to go through the financial crisis. That's when millennials entered the workforce, and it sucked, right? I think there's actually some truth on both sides, truthfully. Going through the financial crisis as a millennial was awful. For all of those that went into the workforce at that time, it sucked. A lot of millennials remember what happened to their parents during 2008. They got wiped out, and retirement either got taken off the table or extremely extended. So there was trial there. Now, where I'll give Gen Z, where I agree with Gen Z, the cost of homes it's too high. This doesn't make sense. That's one. When you have an inflationary moment like we had for the last really 3 years, that makes the cost of living go through the roof. That's a pain point that I think you guys are fair in holding. Now, you guys have a lot more tools, though, than the generations did before you. Your ability to make money is easier today than it's ever been. That does not mean it's easy. It just means it's easier. Now, the cool thing about Gen Z, you guys are more financially focused and sound than a generation that I've seen in a very long time. You guys are about your money, and you are creative. So I don't think you're going to give up. I think you're going to find new ways to do this. This is a sign that that's absolutely what you guys are gearing up to do. Here's a stat that I thought was interesting, is that 55% of users on TikTok use it to discover new things. So TikTok, for 55% of people, has become their finance professor. 69% trust creator content over brands, and 40% want brands to show more personality. So they're connecting with creators and they're becoming their kind of go-to on what to do. If that's the case, you're going to continue to see a buy out of the old institutional way of investing, and you're going to see more alternative ways to do it. The tokenization is alternative, but it's very fast making its way into institution. Tokenization real estate's not magic. Here's something you got to be careful of. It still comes with landmines. It still means you can lose money. Here's some of the things you need to be careful of if you're looking at investing in a tokenized real estate investment. Regulation is still a little bit loose. So most of these token deals fall under securities laws that limits who can buy and how shares can be sold. This is a pain point that I talk about often, and I experienced it when I started Commune. You can only accept accredited investors in a lot of private deals regulated by the SEC. So that means high net worth gets to participate. That's frustrating to me because I always wanted to start a company that helped people achieve financial freedom. I didn't really have a desire to build a company that just created legacy for already wealthy people. I'm not saying there's anything wrong with that. It's just not my intention in starting the company. So I do think this is going to open the door for the masses. There is tech risk still. So there's still bugs in smart contracts. There's platform hacks that can happen. $1.7 billion was lost in crypto hacks last year. So we're not at a point where this thing is totally seamless yet. Liquidity is something I talked about. That with tokenized real estate, you can sell it on a secondary marketplace. You have to remember you still need somebody to buy it from you. If no one's willing to buy, you're not getting liquidity, even if there is a marketplace available. And then compliance. Platforms like Homebase took 7 months just to structure one legal offering. So this isn't plug and play. It's still early. I'd recommend doing your research, understand the platform, always be smart, but it is important to know where we're headed because what every investor will tell you, the more information you have and the earlier you are, the higher opportunity you have in front of you. So don't let go of that. Institutions and what's coming. If BlackRock puts $10 trillion on the blockchain, I don't think this is a trend any longer. This is like happening in real time with real money. Big money is paying attention. APS bought $3 million in tokenized real estate bonds. BlackRock is moving to tokenize $10 trillion in assets. Japan, here's a crazy one, has fully regulated the space and is way ahead of the US. By 2026, institutions are expected to put 5.6 of portfolios into tokenized assets. Some analysts say this could be a $3 trillion market by 2030. That's just around the corner. We're not in hype phase anymore. We're in the infrastructure phase. And people who move early, like I just mentioned, they're the ones who win. If you're not filming your content vertically with captions right now, you're invisible. Okay, so I'm going to move over a little bit to content, but you're going to understand why. 15-second reel clips from every episode with trending sounds and caption overlays, they're getting everybody's attention. And if people are making decisions based on content, if you are a asset allocator, a fund manager, anyone in the investment space where you are getting investors, there's still a time where you don't have to create content, but where we're headed, I think you're all going to have to. You're watching this with the Gen Z brands. The brands that are resonating right now are not the ones that were working 5 years ago. If you look at social media and the brands that were selling, everything was perfectly curated, right? You went to somebody's Instagram and the page you looked at looked like something out of the magazines. All the pictures had the same color tones. It was a vibe. That is not what's resonating anymore. What's resonating is the content forward founder. And my wife really proved this out. So as a business owner, I'm always trying to figure out where the next trend is so that we can basically be caught up. And I'm looking at how all the kids are selling product and they are talking about their business inside and out. They're taking the audience behind the scenes, showing them the warehouse, the employees. Basically, you are, as a consumer, doing business with the creator. And people are buying into that. That's what's working. Now, the investment world and the real estate world is very far behind, an entrepreneur that's selling a product. but they're a very good gauge on where we're headed. So I would really, really recommend, if you are like me and you're not doing content, you got to get here. It's hard. I know it feels like it's not worth it, but if you really game this thing out, we will get to a point where if you're not doing it, you won't be competitive. And this is something that I tell financial advisors all the time, right? I have a lot of friends that are financial advisors and they don't go anywhere near content. They're like, I don't want anything to do with it. The compliance is a nightmare. No one cares. I'm managing $1 billion of AUM. I don't need it. And here's what I tell everyone. You are not going to be able to compete with the next generation if you don't get on this. The reason being, my kids, they are born into it. Like even my girls, they're not on social media at all. They want to borrow my phone all the time to film themselves, put on their shoes and comb their hair, right? And everything's done like a YouTube tutorial. They've never even seen it before. The next generation is going to be doing content at a level that we've never seen before. And the second that next generation enters into your field, in this case, financial advisory, it's going to be so hard for you to compete that you're just going to lose market share from that point on. And so I would really recommend getting ahead of the curve. It doesn't mean it's going to be easy, but if you don't, you run the risk of having 20 plus years of building a business and then watching kids basically take it over and not being able to compete. Probably the best example, if you're an athlete, how bad does it suck when you're the old guy or the old girl and you watch the new kid come in and they rip? This happened to me in skateboarding. Tail end of my career, I'm in my early 30s, and I'm watching these kids do tricks that took me months to land. They're doing it every single try. Competition is equally as fierce in the business world as it is in pro sports. So please, please take this from me. If you want to be here long, get ahead of the trend. This is the trend that's coming. All right, so what does that mean? If you're a real estate investor and you don't like crypto, does this mean you have to invest in crypto now? No, I'm not saying that. What I'm saying is where we're headed, this is going to make investing seamless, more trustworthy, and much easier. I think this is going to be very good for the real estate industry as a whole. I hope this segment was informational. I hope you listen to some of the stuff if you're a business owner and apply it. If you're not following the podcast, please hit me with a like. It helps get this out to more people. Subscribe if you enjoyed it. I will be here next week to drop more information so that we can stay on our investing game. What's a cool way of saying it's not on fire? That's old school. What would be a good close? What are the kids saying? Peak ROI. Let's keep our peak ROI up. All right, gang. I'll see you guys next week.